AMC is fighting today, fighting for this technical breakout, and tomorrow is going to be very important to signify, are we going to break out of this inverse head and shoulders pattern? Are we going to break down to that $25 level? That's what we're going to talk about here in this video, give you guys the end of the day scoop. All of the information you need to know will be provided to you here in this video. So let's not waste any more time, let's get straight into it. So in case you missed the video earlier where we went over all of this information, we're going to hash it out in about a 1-minute compressed version of what I said earlier. So the head and shoulders, this neckline is very important. That is going to signify a possible breakout to the upside or a breakdown to the downside to that $25 level. It really doesn't matter in the longer term sense of the moass what happens, but if we do see that move to the upside tomorrow, that's going to be very important. We have the Bollinger lines right here. These two green lines are 2 standard deviations away from the current share price. Most importantly, the 20-day simple moving average is this blue line, and you guys can see the direct pattern that we are seeing is the stock is closing right under the 20-day simple moving average, including today. That's why we're staying in this very close range, but we're also seeing a ton of support at the neckline at about $28.50 per share. We're currently $28.76 per share. So it's going to be important to see what happens at the close of today, but more importantly, the move that we see tomorrow. We're getting down to this very tight range of about 30 cents or so, and we're going to make a big move to the upside or to the downside. So that's basically in a nutshell what you guys want to watch out for. Make the move to the upside over the 20-day simple moving average. Then our next stop is $32.72, where we will get that next level of resistance at the 200-day moving average. After that, I don't see any credible resistance until about $40 per share. So the sky is essentially the limit after that, and we could set up for a very strong rest of this week as well as heading into the first couple weeks of January, as we should see the January effect. If you guys have not seen that video that I just posted at about 3 o'clock, go ahead and check that out. That breaks down the whole situation with the January effect. But even on top of that, and why I am leaning more to a bullish breakout, is the MACD is still bullish. Even though we really have been going down essentially over the past 4 or 5 trading days, the MACD has gotten even more bullish. This is a key indicator. If the MACD was even curling to the downside, I would not be saying what I am saying right now. But we have not seen a curling of the MACD, and this yellow line, this gap between the blue and yellow line is actually widening. So that is becoming even more bullish. When the yellow line is under the blue line, that is extremely bearish, and the wider the gap, the more bearish you are. And same thing for the upside. When this yellow line is above the blue signal line, that is bullish. The wider the gap, the more bullish it looks. So as far as these indicators, you're looking at a big move, I personally think, to the upside, but I wouldn't go out and make any trades based off of this until you do get the confirmed direction. We could definitely fall back down to the $25 level tomorrow if we do fail to break out past the 20-day simple moving average. But if we break out above that earlier in the day tomorrow, then we're probably set for a continued rally back to the 200-day moving average. So that's really what you guys need to know from the technicals. As far as the volume, we're at 26.3 million, which is actually very bullish. Forget the shills you see saying, hey, the volume's very low, where's the moass? What's gonna just forget that. Throw that out of the window. You need low volume heading into high volume to see big increases in share value, like we've seen back here. December 16th, only 43 million for volume. The next day, 144 million for volume, and the price went up 20%. When you see back and forth, high volume, low volume, high volume, low volume, you don't see anything significant happen to the share price like we've seen back here after the rally in June, and like we've seen throughout really until October, right? Until a lot of the traders exited the stock completely. But what do you see when low volume heads into consistently higher volume? You see these moass-like events back in January and as well as June. So low volume is actually bullish. Forget what people are saying. They don't know shit about anything if they're telling you low volume is bearish. Now let's get into the Ortex data, the Stocko tracker data, as well as what is going on in the overall markets, because we're seeing a strong day overall. Holiday sales are through the roof and we're heading into the January effect. So I do want to talk about that as well, and what the projections are for AMC's domestic box office numbers next year and why that is so incredibly important to basically everything we are talking about here in this video. So as far as the Ortex data, 18.84% short interest of free float. We're going to get the exchange reported short interest data that comes out here very shortly. And we know this data is going to be in between 20 and 25% when it comes in the exchange reported short interest. So I really take Ortex estimates with a huge grain of salt. It's the best available data that we have for intraday updates, but you still have to take it with a huge grain of salt. They are indicating about 97 million shares that are sold short, with a share utilization of 77.65% and days to cover 2.38 days to cover. The higher this is, the better we are looking. You want to see this very high heading into high volume and bullish price action, and that is what ultimately squeezes the shorts, because it makes it very hard for shorts to get out of their positions. Because after all, if people are holding on to shares when short sellers need to buy those shares back to cover on their short positions, if there's not very many people selling their stock, then they have to wait a longer time to get out of their short positions, driving the share price up in the meantime. So that in a nutshell is why that is important as well. Now, as far as the Stocko tracker data, seeing something that is very, very interesting. For January 21st, 2022, you're seeing a huge decrease in the out of the money calls, 262,000 now. We were at about 430,000 just on Friday. So there's some form of de-risking happening from the market makers. I'm not sure exactly why. I like to think this is bullish, but I don't exactly know. So I'm going to be doing a lot more research on this, why this is actually happening, and try to bring you guys an accurate reason of why this is happening. Because I could pull shit out of my ass, but I don't want to do that for you guys. I don't know. That's the simple truth. Why the out of the money calls have decreased so much January 21st, 2022. I don't think retail has sold their options that they have been buying. It's definitely got something to do with big money. The implications of that, still unknown. As far as the calls that are in the money, 74,000 calls that are in the money, still a very substantial amount, as well as out of the money calls too. So it doesn't throw off this whole thesis of this expiration being a big one. It just means that there's something else we have to look into. There's a reason this is happening. So that's really what you guys need to know from the Stocko tracker data. Nothing too crazy, nothing crazy on the put side as well. But hey, still looking at a big week, January 21st. Also, for the Max Payne expiring this Friday, and this is basically where the market makers try to pin the stock, we're at $29. Now, it is very obvious, due to these technical factors that we talked about earlier in the video, we're going to see a move to the upside or the downside. There's no way that we cannot when you're compressed between a resistance and a support level so strong. I mean, there's a 25-30 cent difference right here, and that's where we've been bouncing pretty much most of the day today. So take it with a big grain of salt. $29 per share. I don't hold as much weight to this as I do something like the technicals. Okay, so now, if you guys have not seen, institutional investors, they're buying a shit ton of AMC stock. A 10x or more increase in the rate that they are buying AMC in December. Why is this? In my personal opinion, some hedge funds are setting up for a very strong 2022. We can see right here, the estimates for the domestic box office is currently projected to hit $9.2 billion. That would put us at about 2016, 2017 levels for the domestic box office. And we already know AMC needs $5.2 billion at the domestic box office to be free cash flow positive. But what analysts fail to realize, and what you will not hear on financial media or really on a lot of other YouTube videos as well, is that AMC's business is much more efficient. It doesn't always matter if you're increasing your sales. If you can become more efficient on your business operations to generate the same amount of revenue, say what AMC was doing, what the domestic box office was doing in 2018 and 2019, that efficiency is going to lead to huge profit margins. And AMC is about 30% or more efficient now than they were before the pandemic. Why is that? They're an over 100-year business. You accumulate bad debt, bad fat, bad businesses, bad business endeavors. When you're close to bankruptcy, you have to figure out, hey, how can we save money? What do we need to close that is not making money? Once you reopen, those bad theaters have not reopened. So that is freeing up a lot of opportunities as well for AMC, and that's going to bring in tons of profits, in my personal opinion, in 2022. It might be Q2, Q3, Q4 before we actually do start to see the free cash flow and the profits start to roll in, but I even think it's possible for a special dividend in 2022 based off of what I am saying. If you guys have not seen exactly what I am talking about, you have a clue what I mean by efficiency of AMC, go watch my dividend videos, how AMC could issue a dividend in 2022. We break it all down, the cost of revenue, the operating revenue, as well as the gross revenue compared to 2018, 2019 when they did pay a special dividend, as well as a dividend regimen, and compared to 2021, the business is much more efficient. Now, on top of that, we actually do have JP Morgan as well as Forbes that is calling out the January effect. And what stocks tend to benefit the most? Especially smaller companies with weaker performance the year before. Might we see the same trend in 2022? Essentially, long story short, yes, they think we're going to see this same trend. There's a lot of tax loss harvesting that happens in December, and then those stocks get bought back up again in January. And I think AMC is set for a very strong year. So it makes sense to buy AMC on a risk to reward basis. We just tested these lows at $20 per share. Now we are $29 per share. Your worst case scenario is $9 loss per share. Quite substantial, but what is your max gain? Going back to the 40s, the 50s, 60s, hundreds or thousands of dollars. You don't think hedge funds have more information than us? We're just scratching the surface on all the information that is out there. And if we are seeing what we are seeing, imagine what they are seeing. That's why you're seeing institutional investors loading up on AMC stock. And the final bit that we need to get into today, the S&P hits a record as investors look for Santa rally. And that is still on the table. That's why I'm wearing the Santa hat. But we also see holiday sales jumped 8.5%, MasterCard says, as shoppers shrug off higher prices. If people are willing to pay higher prices for Christmas, they're going to be willing to pay to go do fun activities. I think it's pretty straightforward. But that is basically going to wrap up this video. We could keep going on and on and on. I think you guys get the point. Tomorrow, very important, the January effect, the institutional buyers, all of this is key, and I think it sends us a huge flag, a huge green flag that we are in for some gains in the month of January as well as February, but tomorrow is very important. So hit the like button for me, consider subscribing to the channel. Let me know down below in the comment section what do you guys think about this information. Links down below in the description of this video to get all the free stock your heart desires. It's free money. You guys might as well check it out. And the pinned comment down below has the link for my Twitter account. Go ahead, follow me over there, as well as the link for the buy and sell alerts. Love and appreciate you guys. Thanks for watching this video. I will see you in the next one.